Welcome back, traders, to my market outlook on index futures for the week of October 27th. So it's that time of the month again where we'll be going into non-farm payroll week, and per usual, the protocol is to take it easy on the trading, not risking too much, especially going into Wednesday, because NFP week tend to be very choppy and non-directional. Now, also because I expect a lot of volatility the week after due to the elections, this NFP week could be especially choppy. So give yourself permission to not trade. You don't have to trade every day or even every week. Remember, the most successful traders avoid times of low probability, and they only take bets that they know they will win. Just let everyone else blow up this week and the next. I'm thinking we'll get a good market condition after the election results. So as such, I will be going on vacation and sitting the next couple of weeks out on the sidelines. So there's a chance there won't be a weekly outlook next week, but I'll have my laptop with me and I'll give daily updates when I can. But for now, let me give you my thoughts for the next couple of weeks. So looking at S&P on the weekly, we did close down on the week, but I do see a bounce off of that weekly volume imbalance, and the body did close in the upper half of the weekly fair value gap. So I'm still leaning towards the upside for now. I've got my eyes on these relative highs, especially if they really look attractive on the daily chart. For the downside, I would target these equal lows, but only if we see displacement below this weekly fair value gap and below this low. Going down to the daily, we do have relative equal highs, but they're not particularly enticing. I do like how we're currently respecting the consequent encroachment of the weekly fair value gap, but I'm not thrilled with this daily wick or these SMT divergences on the highs. So a mixed bag of information is not very clear. I will want to wait for confirmation in this situation. For the upside, I want to see price trade above half of this wick. Then I want to see it being used as support. And then if we see some sort of a shift here towards the upside, that will be my confirmation for price to trade up to these highs. Now on the downside, I want to see price trade up to half of this wick, but I don't want to see it go above it very much, if at all. Then I will want to see it strongly displace below this weekly fair value gap, ideally creating relative equal lows. Then I want to see it use this fair value gap as inversion, and if I see a shift here, that will be my confirmation for price to go down and take out the relative lows that it just created. Now there is a lower target, but for this I will want to see closure below the mean threshold of this order block. Moving on to Nasdaq on the weekly, we got a very indecisive candle last week. Large wicks on both sides with barely a body. So another tough trading week, but we're still in the weekly CIVI and we still close below the mean threshold of this order block. So I still want to lean bearish, but only slightly. I'll need more information from the daily chart. On the daily chart, I'm highlighting this daily CIVI, and zooming in, you can see that Friday we did sweep above all of these highs, but it left a small portion still open on that daily CIVI. And like S&P, we have a large daily wick, so I have my eyes on half of this wick. Now for me to be actually bearish, I don't want to see price trading above half of this wick. Ideally, we won't even trade to half of this wick, and I'll go down into the 4-hour chart to outline this, but before I do, let me give you my targets for both sides. On the downside, I'm looking at this swing low, and because the swing low is below the mean threshold of this daily order block, I'm also going to look for price to draw back into the weekly fair value gap, and if it's really weak enough, then also below these lows. Now if my bias is wrong and we're trading up, the only two targets I can see for now is half of this wick and then also the small unfilled portion of the daily CIVI. If it gets completely rebalanced, then I'll need to wait and see what price wants to do from there. Okay, going down to a 4-hour chart, last week we dropped down into this order block that I told you about. However, we didn't get any continuation lower. Instead, price rallied up to take out the buy side liquidity above all these highs and then returned back to equilibrium. So we've taken sell side and we've taken buy side. This week we could just consolidate in order to build up more orders for the following election week. So I'm not really excited to trade this week, but I am leaning slightly towards the bearish side on the higher time frame. And since we've just taken the buy side, I want to lean bearish on the 4-hour as well. But I need to see multiple bullish arrays fail. Price is currently in a bullish fair value gap, and we have a bullish breaker just to the left. You can see we have a low, high, lower low, then displacement above the high. This is typically a setup that I would like to take, but I don't like how we've already taken out the buy side liquidity. And as you can see from the daily chart, I don't have any obvious targets on the upside. So really, I'm using this to see if it will fail by seeing if price will trade below this low right here, preferably below the breaker. That way, the fair value gap here will fail and the breaker will be violated as well. And this will also give me a change in the state of delivery. If that happens, then I want to see one last confirmation just to make sure we're not going to be using this fair value gap as inversion. I mean, there's no guarantee, but it will help convince me that price might be heading for this low. So as you can see, I have conflicting bias for S&P and Nasdaq, and both are in a place where it's not obviously clear on where price wants to go. Compound that with non-farm payroll this week and the election next week, it really does seem like anything could happen. Normally, I don't give out any trading advice for my own protection, obviously, because I'm not a licensed financial advisor. But I think it's safe for me to say, do not trade for the next couple of weeks. You don't need to trade every day. You don't need to trade every week. Only trade when price is so obvious to read, you can't frame it in both directions. You can only see it going one way, and that is high probability. And right now, the market is not high probability. Going back to the daily chart, for the past month and a half, we've had no inefficiencies on the daily chart. All the wicks overlap each other. Compare that to earlier this year where we've had significant displacement. Right now, we're just in a really tough market condition. So I urge you to take a couple weeks off, work on your discipline, work on restraining yourself from making a regretful decision. So that's all I have for you this week. I hope you were able to get something out of this video. If you did, please leave this video a like and subscribe if you haven't done so. Also, let me know in the comments. Say, I will restrain myself. And until next time, guys, stay safe.